Welcome to This Explainer. Today, we're diving into a totally fascinating dynamic playing out in the global markets right now. We're going to take a fast-paced look at the massive forces and, honestly, the absolute extremes of corporate risk-taking shaping our economy. We're talking $100 billion bets, historic corporate surges, and, well, equally historic and catastrophic collapses.
Right now, the global economy is essentially in this massive tug of war. On one side, you've got some serious geopolitical threats. With the disruptions in the Middle East and the closure of the Strait of Hormuz, you'd normally expect the global economy to just buckle under the pressure of higher energy costs and supply chain chaos. But on the exact opposite side of that rope, pulling with unbelievable force, is unprecedented technological demand. And surprisingly, the global economy is actually taking these geopolitical shocks in stride.
This quote right here brilliantly illustrates the macro situation we're in. Kristalina Georgieva, the managing director of the IMF, recently said we have literally a tug of war between the negative supply shock from the Middle East and the positive demand shock from AI. It's wild to think about, but the AI boom isn't just a tech story anymore. It's literally acting as the ultimate economic shock absorber for the entire planet. It's offsetting the squeeze from the energy crunch and acting as a primary engine for growth.
And you can see this AI fever spreading like wildfire across the global supply chain. It's triggering explosive export growth in Asian markets because they're rapidly feeding the physical build-out of all these global AI data centers. Just look at these numbers. Exports from China, up 25% from a year earlier. Taiwan's exports are up 33%. And South Korea? A staggering 63% jump. As data centers pop up all over the world, they're sucking in semiconductors, electronics, cables, metals, you name it, at a truly blistering pace.
So here's the crucial takeaway. This single industry has become completely foundational to our overall economic health. Check this out. ING estimates that this AI frenzy now accounts for roughly 1/3 of the entire United States economy's recent growth. 1/3. Let that sink in for a second. A single technological boom is practically keeping the broader global market afloat, shielding us from the very real scars of recent global energy disruptions.
Section 1. NVIDIA's massive surge.
You really can't talk about the AI boom without talking about its primary engine, NVIDIA. We are looking at a company that has completely redefined market expectations, and the numbers are mind-boggling. $442 billion. That is the sheer amount of value NVIDIA added to its market cap in a single day, right after releasing some blowout second-quarter results. To put that into perspective, that one-day gain is roughly equivalent to the entire GDP of some countries. It actually only trails a $450 billion one-day gain made by Microsoft earlier in July.
Right after their quarterly report, which, by the way, completely squashed Wall Street's fears that AI chip demand might be cooling down, NVIDIA's shares surged 8.7%. That's the steepest one-day jump for the company since April of 2024. It's this otherworldly growth trajectory that literally keeps forcing analysts to completely rewrite their financial models.
But there's always a flip side to massive success, and this number is just as staggering. $279 billion. This is NVIDIA's current supply chain commitment. The company is basically placing a massive $250 billion bet to corner the market on the components it needs, specifically those high-bandwidth memory chips. They actually more than doubled this commitment from $119 billion just in the previous quarter. Why? Well, to make absolutely sure they can confidently deliver on their projected 70% revenue growth for the next fiscal year.
But securing physical supply isn't their only play here. They are aggressively using their own massive balance sheet to prop up the broader AI ecosystem. When you objectively look at the financial filings, NVIDIA is taking on escalating financial risks to keep this boom alive. For example, they recently paused a financing initiative that offered credit to AI cloud providers in exchange for revenue shares. And even more significantly, they're providing a $105 billion backstop on an open AI data center lease and guaranteeing $36 billion in sales for cloud computing companies that buy their chips. They're essentially carrying the working capital for their own customer base.
So NVIDIA is putting hundreds of billions of dollars on the line in the strategic wager that demand will only keep going up. But it really makes you wonder, what happens when a mega trade, a massive bet on a hot commodity market, spectacularly backfires?
Section 2. A $2 billion bust. Now we're doing a hard pivot from NVIDIA's high-flying success to the catastrophic failure of a company once considered a major winner in a completely different boom, the green energy and sustainable investing boom. We're looking at the ruinous commodity trades that took down NVIDIA. The anatomy of this collapse really starts back in 2022,
Russia's invasion of Ukraine created a global energy shock, which caused a massive boost in demand for NVIDIA's alternative energy product, which is wood pellets. Then, in September of that year, a fire at a Danish customer's storage silo meant they couldn't take deliveries. Suddenly, NVIDIA had all these surplus pellets to sell on the spot market, right when prices had artificially spiked to 3 times their normal range. According to a recent lawsuit, executives arranged to sell these pellets at record prices to Germany's RWE. But here's the catch. To seal the deal, they committed NVIDIA to buy back wood pellets from RWE at those exact same sky-high prices later on. That's a $650 million purchase obligation. Fast forward to 2024, spot prices inevitably crashed back to earth, and that triggered a full-blown corporate bankruptcy.
The aftermath of this $650 million spot market gamble was just a complete wipeout. Creditors are now seeking over $2 billion in damages. 5 former top executives are being sued by investors and suppliers who allege they concealed these incredibly massive and risky trades from the board of directors. Once the spot market normalized, it totally ruined the company's liquidity because they were locked into buying at that absolute peak. NVIDIA, a company that used to boast a nearly $6 billion market value, reorganized under new ownership, and its former shareholders received absolutely nothing in the bankruptcy.
Section 3. The bottom line.
Let's bring these two extreme market examples together to kind of map out the broader global economic picture we're all navigating right now. We are truly living in an era of massive corporate wagers. On one hand, you have NVIDIA's $279 billion bet. They're systematically using their capital to corner the physical supply chain and fund their own customers, attempting to sustain a historic AI boom that is, quite literally, holding up global economic growth. On the other hand, you have NVIDIA's $650 million bet. Executives allegedly chasing temporary spot market spikes for short-term gain, leading to a multi-billion-dollar catastrophe. Both situations represent a market environment where companies feel compelled to take absolutely breathtaking financial risks to either secure their dominance or just exploit a momentary advantage.
Which leaves us with this final thought. We've seen how a well-timed, structurally supported bet can add almost $500 billion in value in a single afternoon. And we've seen how a ruinous spot market miscalculation can literally vaporize a $6 billion green energy giant overnight. As corporations continue to wager hundreds of billions of dollars on the future of AI, energy, and everything in between, we have to ask ourselves, who is going to be the next to boom or go bust? Thank you for joining me for this explainer. I hope it brought some clarity to these massive market moves. Keep your eyes on the data and keep learning.